If you have been asking questions like this, why did all the technical analysis tools indicated that the market will go downwards? I opened a sell position and then boom, the market just skyrocketed into my stop loss in the complete opposite direction and I lost money again. Why I cannot be consistent in the markets, and when I win some trades I always lose some trades. Why I am still not profitable and my trades are always falling short. I know exactly why, and that is probably because you are not using any checklist before every trade that you take in the financial market. Not having a checklist usually results in taking dumb, uncalculated, not smart trades that usually results in you losing money because the price just hits your stop loss. So in order to make good, calculated, strong trades in the financial markets that you will not regret, you need to have a checklist, and today I will talk about my personal checklist that I use in the financial market. The first thing that you need to check, not only before taking any trades but actually before the whole trading session, is fundamental analysis and is there any news in the markets. If you experience situations like technical analysis are definitely indicating that the market will go downwards, you are opening your sell position, at first everything is going great, you're making money, and then boom, the price goes against you right into your stop loss, and that's it, you were stopped out and you lost money, and you are sitting like this wondering why did it happen, why did the trade went against me. You are starting to blame everyone, but in reality probably something in the fundamental news happened that drive the market against you. So before every trading session, go to platforms which provides you with fundamental analysis like news that are driving the market. Read about each pair before the trading session. So if you choose the euro pair, read about it, what major economic events are coming out that potentially move the market. Be aware of the major economic events like inflation or interest rates and so on. So either A, do not trade at all when the major economic news hits your pair or the market in general, or B, make sure that you know what you're doing and on which side you are standing. You probably know that in the markets it's really common to have smaller trends within the big major trend. And what a lot of new traders are doing, if the market at the present moment is moving upwards, they are always interested in buying and they are not seeing the bigger picture, and then they open buy position and then boom, the market goes against you because the major trend was actually downwards. So if that's a little bit confusing to you, here's an explanation of how to actually analyze the major trend. So let's take a closer look at what trading with a major trend means. So here, as you can see, if we analyze the market is moving upwards. We have a perfect market structure. As you can see, we are making impulses and higher highs, higher lows, then impulse retracement, then a larger retracement over here, but still the price is moving upwards. And if we take a trend line, we basically can see that over here the market is definitely moving upwards. So this seems like a good analysis. The market is moving upwards. So imagine over here we are opening a buy position, we set our target, we set our stop loss, and then boom, look what happens. The price just moved downwards completely and we were completely wrong. And that happens basically if we zoom out a little bit even more. Currently I'm on 2-hour time frames, but if we zoom out a little bit more, we can see that this was only a short term upwards moving market, but in reality the market overall is moving downwards. Boom. If we take this high right here and we take this high is much lower than this high, and the major overall market trend is actually moving downwards. So it's really important to correctly identify the major trend. A lot of new traders that are coming into the markets, they are just looking at what's going on over here at the present moment, that the price is moving upwards or moving downwards, but in reality you have to understand the major trend and what is basically going on a longer time frame. So probably after understanding that the major trend is actually downwards, and here after these highs we can see that this high is lower and the market is actually moving downwards, we would definitely reconsider opening buy position right here, because this potentially may happen. So this is really important to think about before opening a position. Doesn't matter if it is a buy or sell position, look at the general direction of the market. So then when you understand all of these things, you understand the major trend, you need to think about market structure. With the market structure, you will be able to easily recognize where the markets are going, where is the best potential entry spot, and after you basically analyze your major trend, you analyze the fundamental analysis, you analyze the market structure, all of your trades will be instantly stronger. So for those of you who are interested how to analyze the market structure, this is the way that I do it. So let's look at this example right here. We can see that we have an impulse downwards, then we have a retracement, impulse, retracement, impulse, retracement, impulse, retracement. So as you can see, the market is moving according with the common physics, the common theoretical framework. So in this case, you can easily capitalize on the markets. First of all, of course, you identify the major trend, which is directly linked with the market structure. Identify where you have your impulses, where you have your retracements, impulse, retracement. And then what you need to do is never to buy in these kind of circumstances. Never buy when the market is moving downwards, and basically every single impulse is making lower lows and lower highs. So that means that you are definitely in a downtrend. The market is moving downwards, so you are only interested in selling, and what you only need to do is try to identify the potential retracement. So imagine the price is retracing, and then you have these green candles, which are indication that the price is moving backwards. That means we are in a retracement, and maybe you have a level, maybe you have a Fibonacci or some sort of technical tool that is indicating that over here the price will face resistance. That is a great place to open an entry. So make sure before every trade that you also check the market structure, you also check your entry, and these things will definitely increase your profitability. So by combining all of these things together, the fundamental analysis, major trend, and market structure, this can already be put into one great strategy, and it will definitely make your trades very calculated, very strategic, and very strong in general.